The week's index measuring fear and volatility climbed to the highest level in months. Investors dispelled fears about contagion in the banking sector. Despite tranquility in the market, we should not forget about the second day of hearings in the Senate and a fresh batch of macroeconomic data. The U.S. benchmark stock indexes closed yesterday with a modest decline. Investors assessed comments from the U.S. main regulator on a bank woes and sold shares of high-tech companies following the recent rally. The major stock indexes dipped yesterday and the Dow Jones shed 37 points or 0.12%. The Nasdaq closed 0.45% or 52 points. The S&P 500 slipped by 0.16% to close at 3,971 points. The pre-market today was more optimistic. All three indexes went up in confidence, and the futures on the US stock indexes rose by 0.7% and 1.1% before the opening bell. The S&P 500 is expected to trade in the intraday corridor between 3,940 points and 4,040 points. The hearings in the Senate softened investors worried about a full-blown banking crisis, and Fed Vice Chair for Supervision Michael Barr said that Silicon Valley Bank did a dismal job on risk management, which entailed its crash. The regional banking sub-index dipped by 0.2%. Intraday in sync with the shares of regional banks in response to the prospects of tightening rules for banks with deposits was more than $10 billion. Apple and Microsoft shares, as well as the stocks of other high-tech giants, dropped yesterday, which put a lid on the S&P 500's performance. The reason is a profit-taking after a strong quarter. Besides, the Confidence Board survey revealed that consumer confidence in the United States unexpectedly improved in March, but Americans voiced concern about the labor market. As a result, the high-tech sector in the S&P 500 slipped by 0.5%. Yesterday, extending its decline this week, still the index is on a track to close the first quarter with solid gains. Yields of the U.S. Treasuries went up, which put pressure on the high-tech stocks. Alibaba shares surged by 14.3% in light of the news, and the company plans to split its business into 6 main divisions, dealing with e-commerce, media, and cloud technology. Micron Technology shares grew by almost 1%, and the company's revenue forecast for the third quarter matches Wall Street consensus. Futures on the U.S. stock indexes rallied in the New York pre-market. The sale of assets of the failed Silicon Valley Bank subdued market jitters. Stocks of the U.S. domestic banks traded mixed. Western Alliance rose by 0.6% and First Republic fell by 0.7%. Shares of Bank of America, Goldman Sachs and JP Morgan climbed by 0.7% to 1.6% in the pre-market. A pullback in the yields of the U.S. Treasuries unfolding amid waning banking fears encouraged growth of high-tech stocks. Shares of Microsoft, Alphabet and Meta added from 0.8% to 1%. Today is the second day of Michael Barr's testimony in front of lawmakers. JP Morgan estimates that vulnerable banks have lost almost $1 trillion in deposits since the Federal Reserve embarked on a monetary tightening. Half of their losses occurred after the crash of a Silicon Valley Bank. JP Morgan discovered that nearly $7 trillion in bank deposits remain unencumbered. Analysts reckon that the banking shock will hardly spread across the whole sector. The Allen Silicon Valley Bank went bankrupt due to low liquidity and a high share of uninsured deposits. From 42 publicly traded lending institutions insured by the FDIC, only 7 banks have the same problems: more than 60% of uninsured deposits and less than 80% of liquid capital to deposit ratio. To sum up, such snags pop up at some small-sized banks. Thus, the risk of a broader crisis is limited. Today, investors are keeping tabs on pending home sales, oil inventories, and the second testimony on a Capitol Hill. Alibaba shares are the culprit of the market optimism. Investors welcome the news on the company's overhaul, which could be the sign that a corporate crackdown in a Beijing is coming to an end. The company's shares jumped by 16.3% in Hong Kong. Previously, Alibaba shares rallied by 14% in the United States. Micron Technology shares rose by 2.3%, and today, as the chip manufacturer predicted, sales growth in 2025 driven by artificial intelligence. The US dollar regained its footing before the opening bell on the back of easing pressure from the euro, sterling, and the yen, and the US dollar index rebounded by 0.3 to 102.70. The intraday corridor for the instrument is seen between 102.30 and 103.20 points. Today, the greenback recovered against most rival currencies, halting its recent slide. The US currency sharply advanced against the yen, which is trading with a high volatility at the end of the Japan's fiscal year. Global investors have already priced in easing turbulence in the banking sector, as well as an upbeat US consumer confidence index for March. Meanwhile, business activity in the United States and the Eurozone improved better than expected. This survey on the US consumer sentiment was conducted after the failure of a Silicon Valley bank. It means that the initial impact was modest. Yields of 2-year treasuries rose to 4.12%, the highest level in a week. Then yield went down. Futures markets now predict a 50-50 chance of a rate hike by 0.25% and pause in the Fed cycle of a monetary tightening. Such forecasts could be revised after the red-hot data on the labor market released tomorrow and the PCE price index released on Friday. If the Fed decides to make a pause, this will be bearish for the US dollar. However, if this pause is accompanied by a recession, the US dollar will grasp the chance to rebound to 1-year highs. The Canadian dollar has been gaining ground since yesterday, and the USD card pair is now trading at about 1.3590 or 0.06% lower. The intraday corridor for the instrument is seen between 1.3540 and 1.3650. The loonies recovery is going on despite a minor advance of the US dollar. The loonie owes its strength to a rally in oil prices, which has been unfolding for 3 days straight, halted crude exports from Iraq's Kurdish region, aroused concern over supply cuts in the oil market. Iraq had to suspend exports of almost 450,000 barrels per day from its northern Kurdish region following an arbitration decision that confirmed Baghdad's consent was needed to ship the oil. Both benchmark rates developing rapid rally posed to extend a winning streak. Brent futures appreciated by 1.1% to trade at $79.54 per barrel, and WTI futures rose by 1.04%. Oil prices gained support as US oil inventories shrank according to flash estimates. Bitcoin recouped half of its early losses and revived the uptrend. The token regained almost 3.5% and settled at $28,200. Popular altcoins are trading in the green, having grown by 1.7 and 4.2%. After a lawsuit against Binance filed this week, the US Commodity Futures Trading Commission stated that activity of the crypto exchange was aimed at dodging taxes, so the US authorities have to interfere and settle the matter. Following a lawsuit, customers withdrew $1.6 billion from Binance and $853 million in the last 24 hours, which is more than the average amount per day in the last 2 weeks. The crypto market cap increased by 2.5% to $1.16 trillion, with Bitcoin and Ethereum making the strongest dynamic. Notably, the Commission is focused on Ethereum, announcing its support for the token as a commodity. The Commodity Futures Trading Commission acknowledged Ethereum and Litecoin to be commodities like Bitcoin, and the news is bullish for the two popular tokens because their status is confirmed. Eventually, it will promote the legitimacy and mainstream recognition in financial markets, and on the flip side, regulators could tighten their oversight. Some reputable analysts gave an amazing forecast of Bitcoin. The ex-technical director of Coinbase predicted that Bitcoin would rally to $1 million in the next 90 days. He is ready to stake $2 million on his forecast. An exclusive at Gemini made a modest an exclusive at Gemini made a modest forecast, betting on Bitcoin's growth to $100,000 this year, and now the crypto has settled at $28,300. If the price surpassed this level, it will be able to conquer $28,900 and $30,200. Otherwise, Bitcoin could slide to $27,600. And that's all for today. Make profits with the InstaForex, subscribe to the channel and leave your comments below this video. See you online tomorrow.